Okay, so now we got to take a look at how to purchase inventory using the write checks option, all right? But the one that they really recommend you to do is to avoid any, inventory mishaps or anything, like if you have to enter in the inventory item manually. This one's going to be the best way to do it because it also allows you to utilize QuickBooks to its maximum potential, right? There's a reason why they created all of these little icons to make it a little more easier for you to enter in your transaction. So again, to use QuickBooks the best way that you can, utilize the purchase orders. Now, purchase orders is actually a really fun one. So here we're gonna create one, but here let's go over a few things about purchase orders. A purchase order is going to be considered a non-posting transaction. What does that mean? Because a purchase order doesn't really do essentially enough. It's a transaction that doesn't affect the business, right? In terms of a real transaction that actually happened, right? A purchase order is a simple request. It's request for an item. It's a quote that you're given, right? The underlying reason why it's called a non-posting transaction is because no money is involved, and items were not received. It's just a request for an item. I don't know if that makes any sense. So, of course, when you give it a quote, you're not paying for it. You didn't receive a bill. You didn't receive the item. So that's what a purchase order is. It's a simple transaction that is going to set in motion to become an actual transaction. And that's exactly what that little flow of that little flow up here is, right? It's a non-posting transaction that will become a posting transaction, right? If you receive the items, then yes, then you can go ahead and convert that purchase order and make it become, essentially inventory and a bill. Okay, so in this case, that's a little background information for you to understand. As far as purchase orders, you can you can create one and then you can cancel one at any given time. You're not obligated to, go through with the invoices. Or I'm sorry, you don't have to go through with, processing everything and receiving a bill or anything. You can cancel at any given time. Now, of course, I'm going to go ahead and let's go ahead and go do this example here where we're actually going to be utilizing the items that we just created to create a purchase order. So there are a total of 6 ways you can create a purchase order, okay? It's very similar to entering a bill, all right? So here's the first one. You have it on the home page right here under purchase orders. Okay. You also have it on your menu bar, right? When you go to vendor's menu bar, you can actually create a purchase order. Okay. And of course, if you go into the vendor center, any way that you go through either the homepage menu bar or icon bar, once you get here, you can right click on any vendor, right? So in this case, I can right click on Ace Supply and I'd be able to create a purchase order that way, right? Where's purchase order? Enter bills, create purchase orders right here, okay? And you'd also be able to do that by using your new transaction, right? You can create a purchase order right here, just called purchase orders. And then also, you can also be able to do that by going to manage transactions at the bottom, purchase orders. All right. And then last but not least, the 6th way is in fact on your bill tracker. You'd be able to go to manage transactions and create a purchase order that way. Okay. So those are the 6 ways that you can create your purchase orders. So since I'm already here on my bill tracker, I'm just going to go ahead and utilize this one right here. So here I am. And first things first is who am I requesting this purchase order from? In this case, it is Mr. Ace Supply. Okay? And the class that we're making purchases for is going to be for our Walnut Creek location. All right, date's going to be February 7th. And PO number could be whatever you want to associate it with. So in this case, I'm going to make it a 2019-101. I don't know. Yeah, I think it's just one in your book, but I'm going to go ahead and say 101. Okay. Now this is where I can list all the items that I want to purchase. So in this case, I'm going to go ahead and make a purchase of my 5x7 metal frames, okay? And I believe I want 20 of them. 20 of the metal frames. And as you can see here, it fills in that it's going to cost me $2.15. Of course, for any reason that your your quote changes, or for some reason that the market changes for the value of it, you can always adjust it right here. All right, you're not obligated to stick with what you originally cost it for, or what you placed in your items when you set it up, right? Because again, we also have to take consideration, right? Anything can happen in the market, right? Supply and demand. If metal is in shortage, then you can expect this to increase. Okay, so same thing here. You can always change it at any given time. What were you mentioning? Did you have something to say?
Oh, no, I was just agreeing.
Okay. All right, just making sure. Good. All right, and then now the second thing that we're getting is we are going to make a purchase of the 5x7 wooden frames. Okay, and I believe we want 40 of them. And of course, for us, because this is our first time purchasing the item, we need to recognize this, right? We need to recognize that I want 40 of my wooden frames. And then I'm going to go ahead and make sure I click this. Of course, you want to send a message to your vendor. You could say thank you. Oops, I don't want that. Vendor message. Thank you for business, etc., whatever you want to name it. Any memo. So in this case, PO, let me see, we're buying 20 metal and 40 wood. Whoa. Too many typos there. Metal and wood frames. Okay. And of course, because we have a vendor to customer relationship, no tax is charged unless further notice. If you go to an actual store and you don't have a relationship with them, then they may charge you sales tax. Okay. So in this case, I get tax exempt and everything looks good. So I ordered 20 of the metal, 40 of the wooden, and here are my total values here. And yep, that's pretty much it. And I'm going to go ahead and click Save and Close. Okay, so now that's my purchase order. Okay, and what you can do is you can go ahead and take a look at your purchase orders anywhere in terms of if I want to go check it out. I could check it out at my vendor center. Come on, close. Up. Dang, I closed my vendor center. I could check it out on my vendor center, right? If I were to click on my vendors and I click on Ace Supply, right? First thing I have here, if I were to change this to all transactions, is I'm able to pull up my purchase order at any given time. Okay, I can also do that through my reports, right? If I look at my open purchase orders, which you can do. So if I go to my reports and I go to purchases, All right, I can look purchases by vendor, purchase by item if I wanted to. So I could definitely do that. I could do open purchase orders, which is what we have, right? It's an open purchase order because we're still pending on our items to be received. So this is a open purchase order. As you can see, it gives us the details on what the order number is and what the value of my order is. So that's going to be your open purchase orders. Now that I have that, right? Now here's the most crucial part that you need to understand. There are two ways to actually receive your inventory. Okay? And so as you come over across here, now that we created our purchase order, right? Let's see what happens next. So if you go drop down, look very carefully on your receive inventory, right? You have this little drop down little window, and it's going to give you two options. You either you receive the items with a bill, or you receive it without a bill. Okay, and this is very common for businesses to actually do because we have, if we're making purchases of a lot of inventory, what happens is it gets split up into two portions, right? Or it could be that maybe the vendor has a shortage, so they send you what they have, and then they send you another, the other half of it, or whatever it is, the other remaining amount. They send it in a second package, saying, "Well, this is what I have now, so I'm sending what you have now, and then I'm going to go ahead and when the item is restocked, I'm going to go ahead and send it out." So that's one of the two reasons why it is split into two. You're never going to always get all your items in one batch because of that reason. So again, it has to do with supply and demand, of course. So if there's a shortage, then you're more likely to get 2 shipments or even 3 shipments. If you're purchasing too many items, let's say I bought 2,000 items, right? You can expect that they're going to ship you out the first 1,000 and then maybe the other half another time. However, they're always going to send you what's called a packaging slip. Okay? So we're going to explore both ways, and we're going to take a look at doing 2 invoices as well. So 2 purchase orders. So for right now, let's go ahead and explore what happens when we receive it without a bill. Okay? So once I click on receive without a bill, right? What you're going to notice is it creates an item receipt. Okay? It creates an item receipt, and this is very important for the next step. Now, let me go ahead and exit this real quick because I also have to show you how many ways you can get to receive an item. So again, that was a receive item without a bill, right, on the home page. You can also find that on the vendor's menu bar, right? You can receive items and enter a bill, or you could just receive items. In this case, it's just receive items because you don't have the bill. All right? Same thing if you were to go to your vendor center, right? I can right click and I can receive items either with a bill and enter a bill, or without it, which is, just to enter the items the way it is. Same thing with your managed transaction. You actually have the terminology item receipt. Okay? And then, of course, if you go up to the window up here, you can receive items, okay, just by itself, and or enter the bill. Okay, there's only 5, so there's 5 ways there, and I don't believe your income tracker can do it. I believe it has to be through that. So, yep, your income tracker does not have that. So that's why there's only 5 ways. Okay, so no on the income tracker, but everywhere else, yes. Okay. All right, so now I'm going to go back here and I'm going to go ahead and right click on a supply and say I received items, or I want to create an item receipt. All right, so if I click on that, again, it creates an item receipt. Now, in this case, I received a packaging slip. that tells me that I received only half the items. Okay, so when I come here and I click that I validate that this is the vendor that I am receiving inventory items for, I'm gonna go ahead and click. I'm gonna press tab, and what's gonna say is, "Whoa, hey, you have with this particular vendor, you have a purchase order. Is that what you want to use it for?" And I say yes, and then it's going to pull up all your purchase orders. Now let's notice this. So I have to select on the purchase order that I am actually associating this with, and I go ahead and click OK. Now it's going to populate all the information. So now it's essentially taking the purchase order and it's creating your item receipt. However, we know for a fact that we didn't receive all of our items. So this is where you can actually manually click on here and adjust them, saying I only received 10 out of the 20 items of my metal frames, and I've only received 20 out of the 40 for my item for my wooden frames. Okay? And of course, your reference number is going to indeed be your packaging slip number, but because I don't have one, I'm going to associate this with my invoice, right? I'm going to say this is from my purchase order, so PO 2019-101, and because this is part 1 of 2, I'm going to associate it with the letter A, so that I know that this is one purchase order, but this is part A. Okay? And of course, the date that you receive it, I don't know why they put the same date, because realistically, you're not going to get your items shipped in like that. But that's what the book says, so I'm just going to leave it. And again, it changed the value too, saying you only received $121 out of the 253. Okay? And then notice this. If I look on my little sidebar here, I noticed that the purchase order that I'm looking at is that I received this, and that's how much I'm going to be owing, is for the $121. And then I'm going to go ahead and click Save and Close. All right. Once I get that paper of approval, notice this. I have my purchase orders, and what do you know? I have my sales, my item receipt right here. Okay. Now that's only given if you have a packaging slip. So at any given time now, let's say they sent me a letter, and then they notified me that we are out of stock right now. So the next time we can ship something won't be until another week from now. All right. So you do have a choice where you can cancel your purchase order as of right now, or I can just continue just waiting on my inventory item, because again, I don't want to have to go result into another vendor to get the items I need. But in other cases, you can cancel an order at any given time. So you would actually go to the purchase order and actually cancel it itself. Okay, but again, if I look at my purchase order, it's still going to reflect as if I'm supposed to get 40 of the the wooden frames, and 20 of the metal, right? And I'd also be able to take a look at this too. If I go to my, I believe it's the inventory stock status once more, I'd be able to take a look, or my open purchase orders. That's where I'm supposed to go. I'm supposed to go to my open purchase orders report, and it's going to actually show me that I actually received half of it. So purchases, open purchase orders detail. Okay. Once I do that, now it tells me here that I actually received 20 and 10, but my purchase order was for 40 and 20. You see that? So all I'm doing here now is I'm waiting for the remaining of my 20 and the remaining of my 10. So QuickBooks keeps track of it as well. And if I even run my report right now, it's going to show me that I received the other 2 items. So here, let's take a look at that. The inventory stock status report. Okay, so inventory stock status by item. Now I could see that here I received, and in my metal frames, I now have 30, right? I originally had 20 plus 10, I have 30 now. And notice this, my 5x7 wooden frames is now 20. So I received the items already, okay? So as you continue doing this, it records as it goes and it updates your inventory, and that's called perpetual. So as you notice that by me just saying I received the items, it automatically updated my inventory. Okay. So that's what happens when you receive an inventory item without a bill. Now, let's also go ahead and receive the second portion right here. So I'm going to go over here and I'm going to go ahead and click on without a bill. So again, item receipt, and this time a supply. Again, it pops up that you have an invoice, an open purchase order, an open purchase order. You click yes, and notice this, if I click on this item and I click OK, boom, it updated how much items I'm supposed to be receiving, or with the remainder of the items. Okay, it automatically associated that. So from my purchase orders, it already recognized that I've already received half of the items on there. So every time I do another new item receipt, it's now associated that I should be receiving the remaining half. And again, the reference point here is going to be PO 2019-101B, since I'm receiving part B. And in this case, of course, I'm going to change the date for fun, because you should be receiving it, I don't know, on the 10th, let's just say. And then now I can go ahead and save and close. Okay. Now notice this on my vendor center, right? I received 2 item receipts. And, oh wait, am I on the right one? Yeah. So there you go. I have 2 item receipts and 1 purchase order. All right. Now, let's look at this very carefully, right? In my transaction, there are item receipts right now. Okay? So let's go ahead and see what happens when we go ahead and visit the next flow of transactions. So now that I received my items, right? The next step is I have to enter it against inventory. So if I go ahead and click on this right here, now it's asking me, what am I looking for? So in this case, I am looking for a supply. Okay, so I'm going to type in a supply, right? And what's going to happen is it's going to populate my items receipt. The only problem here is you can only select one at a time.
I'm sorry, you were breaking up. You can only see what?
You can only see one item receipt at a time.
Oh, okay.
Okay, so this is the process now. Notice this. I'm going to select on an item and I'm going to go ahead and click OK. What happens is the item receipt switches into a bill. Okay, all right, and everything is here. I'm going to say that I received the bill with my last batch. So here it's recognizing that I have the bill for this item receipt for the 10 items and the 20 items down below. Okay, and in this case, this is part 1, and unfortunately, you can't select multiple item receipts and tag them all in one bill. So that's a downside when it comes to entering in the bill. So in this case, my reference point here, or in this case, my reference number, since this is a bill, is going to be now, whatever it is, 2019 107. All right, and I'm going to go ahead and click Save and Close. What does that say? It says that you have changed the transaction. Do you want to record your changes? Yes. I don't know what changes I made, but that's okay. So now that I entered in, now notice this. If I come back here, my item receipt has changed into a bill. Okay? It has changed into a bill. All right? However, I still have one more item receipt remaining. So in this case, like I've mentioned before, the downside is that you cannot select more than one item receipt and attach it into one bill. You can only do one at a time. So in this case, I'm receiving a second bill. Well, in reality, I shouldn't be receiving a second bill. In this case, this bill has to be 2019 108 for the same date, and for the other remaining half, save and close. Yes. Okay. But so of course with our, with QuickBooks being so smart, if we were to go ahead and pay my bill, right?
Yes.
And I go to a supply, right? I'm able to select them as if it is one bill.
Oh, okay. That
Yes.
makes sense.
Yes. So of course the reference number or the whatever number that you need, it should be whatever's on the written on the bill. So in this case, you could do, you could have done 2001 to that, like 107A and then 107B. But in this case, I decided to associate them as two separate bills. But here you can still pay them as one. All right. So that's just the downside for that. So when you do that, that's the only option you kind of have, is to enter them one at a time. Every single item receipt just becomes a bill. Okay. Any questions on how we received inventory? And let's go ahead and take a look at our inventory stock status. Again, so reports, inventory stock by item. Notice this. Now I received 20 or the other remaining 10 of my metal frames, and I received the remaining 20 of my wooden frames. So as you can see, I have 40 of the metal and 40 of the wooden. Okay. All right. And that's how you enter in a purchase order and receiving it when you have a packaging slip and you don't receive a bill right away. Okay. Any questions?
I think I'm good. I think I can follow that along pretty good.
Yeah, that one it's a little harder because there's like 5 more steps that you have to do. But, that's just what happens when you receive a packaging slip instead of a bill. Okay? When you receive a portion of the items and not everything. Okay? All right. So I'm going to now show you how to do it to receive an item with a bill. And notice this, it's going to be a lot more fun. Okay, so here I'm going to go ahead and create a quick purchase order here. I'm going to go ahead and use Mr. A Supply once more time. And in this case, the date, I'm going to leave it as February 10th, since this is, it's not on the books. It's actually off the books. So I have purchase order 102. Good. All right. The items I'm going to purchase is going to be a camera SR32, right? Because we have 0 of them. So in this case, I'm going to go ahead and buy 2 of them. They're a little bit pricey, so I shouldn't buy that much. So I'm going to go ahead and buy 2 of them. All right. Same thing for the message to the vendor. Thank you for your business. And then, of course, in my note, in my memo, I'm going to write purchase 2 cameras. All right. And I'm going to go ahead and save and close. All right. Oh, I forgot to do let me fix that real quick, because I should fix that. I forgot to state what class they belong to. So I'm going to go to my customers. My vendors. I'm going to go to A Supply. And I'm going to pull up this purchase order right here because again, you can modify it at any given time. So I forgot to place the class on there, and now I placed the class. If I need to modify it at any reason, or let's say I need to up my purchase orders, maybe I need 5 instead of 2, you can do that right here. Just make sure that you notify your vendor so they know that you made an revision to your purchase order. Okay, so save and close. There you go. So now that I've done that, now here's the concept that I want to teach you now is that let's see what happens when I decide to receive the items with the bill. Okay, so I'm going to go ahead and click receive items, and I'm going to go ahead and say with the bill. Boom, automatically it populates the bill. So pretty straightforward as far as this. When you are going to be receiving the items, right? You say it's a supply. You have an open purchase order. Of course, I'm associated with this one and click OK. So, of course, I received both cameras at the same time. Date is going to be, I'm going to say realistically, I got on the 13th. Reference number, again, it's going to be whatever the bill number is associated with. But in this case, I don't know. So 2019-109, I believe I'm on. All right. And I'm going to go ahead, save and close. So straightforward, when you receive items with a bill, and notice this. If I go to my inventory stock status again, it's going to show me that by entering that I have now 2 cameras available. Hold on, wait, it said I had 0. Okay, hold on, I might have to refresh this. Let me exit out of this, and I'm going to go ahead and redo that one more time. So reports, inventory stock by item. There you go. Okay, now it says 11. I didn't even purchase any, but okay. If you remember, I remember it was 0, but okay, it tells me that I have now 11. So I had 9 previously. Okay. Any questions so far on how to do purchase orders and how to receive them with the bill and without? So make sure that you know that if it's without a bill, a packaging slip is going to be considered an item receipt. All right. And then after you receive an item receipt, you have to go against bill, enter them against the inventory and actually validate that you are actually receiving the bill then. So you're converting your item receipt into a bill. All right. So any questions? Okay. All right. Okay. So, now that we talked about that, the next section we have is actually going to be how to adjust inventory. All right. So where is that section? Entering bill for received items. No. Okay. Handling over shipments. Okay, so make sure that you understand this. For any reason that you receive your items and there's too many items in there, know this. You have a duty to do the right thing. Okay? You should either respectfully return the items or you pay for them. Straightforward. All right, do the right thing. So when there is an overshipment, you either notify your vendor saying, "Hey, I have way too much stuff. I'm shipping it back to you." Okay? Or I can say, "Well, since that will save me a trip to have to send you another purchase order, I'll send you a check for the overshipment." Straightforward, not hard. Okay? And there's 3 ways that you can do it. Again, it's self-explanatory there. Okay? Handling vendor overcharges. Same thing here. If your vendor overcharges you money, you tell them why or you ask them why. So that's why it's very important that when you do this, you make sure that you have the bill in front of you and don't assume that whatever is written, okay? Oftentimes vendors could be like, "Oh, by the way, my price is not 215 anymore. It's actually 250." You know, they may pull that thing on you where they say, "Oh, due to inflation of the market," or "I don't have enough materials, um, shortage of materials, so my prices are now 230." So it's always, rule of thumb, you should always call to ensure, but also, if your purchase orders, if you do send a purchase order and it says for 215 and you get the bill and it says 250, then your automatic assumption is, okay, so something must be going on. If you don't like it, then return the items and say it's too expensive. It's pretty straightforward on what you can do when it happens when either the vendor charges you much or they sent you too much stuff. So again, just read that little section and you'd be able to, it's pretty straightforward. Okay? All right. So here, I'm not going to do that one, but let's go ahead and take a look at adjusting inventory. So there are many reasons why inventory can change, especially when it comes to the market, okay? And we learned this in accounting, so I'm going to have to give you a little rewind about this. So we call this lower cost or market. Now, what happens is when you make purchases of inventory, and if it has a long shelf life, you can only assume that as the longer you have it on the shelf, though it can potentially lose value over time, because we have to deal with inflation and we also have to deal with technology every day. There's always something new and better. So that's exactly why many manufacturing companies decide to take that route where they improve the pre-existing product, and every year they come out with a newer, brand new model. All right, so take the iPhone for example, right? Every year, even though your phone is still working, why are they continuing producing a newer phone every year? Because technology says, I want a faster, better phone. I want a better phone that has a better, camera action on it. I want a phone that has a better processor system, right? There's always something to do with that. And of course, with the idea of that, you can also assume this too. If the iPhone 12 right now cost me $1,100, right? Do you think the iPhone 11 can be hold up to that same price value? Absolutely not, because it's like, again, we're in competition, right? So because the iPhone 11, if it's just as good as the iPhone 12, why market at the same price? No one's gonna buy it. No one's gonna buy either one, because they're gonna question, why is the iPhone 12, which is newer, better, and greater and faster, why is it the same price as the iPhone 11? Might as well buy the iPhone 11, or you could buy the iPhone 12, right? Because essentially they're the same price. The only difference is it's a little better. So customers and consumers are going to question, why is it the same price? And obviously, if you are a consumer, you kind of want to go for a better deal, or if the iPhone 11 works just as great as the iPhone 12, you can assume that the people are still going to be willing to buy the iPhone 11 if it's marked down at a lower price. So same thing here, because due to technology, due to things becoming obsolete, right? The value of the market will determine the value that you should sell it out to the market. So if you bought something 5 years ago, you can't expect that inventory to reflect the same price. Okay, so same thing, like if I bought the iPhone 5 years ago, when it was at its prime years, right? The iPhone 6, and I said 5 years ago it was worth $1,000. I bought it for $800. Fast forward 5 years forward, do you think it's still gonna cost you $800?
Oh no.
Absolutely not, because with the
To even still carry it.
exactly, correct. So that's what's called lower cost or market. So because of that, that's the only thing that we can adjust for inventory, is that due to the market value, due to having the inventory stay in its shelf for way too long, you can expect it to have lower in price. Okay. And then the other assumption is that we have to take into consideration is when we adjust inventory is the one main factor is that you should always do this. If you're the inventory manager, have someone go down to the warehouse, basement, or wherever you place your inventory items. Have them take a physical count, because you never know. Your members might steal, okay? As well as compare them to your sales. Did you forget to enter in a sales point? Because you have multiple people dealing with multiple sections, right? And that's what QuickBooks does. If you have someone going into their shift and it was at their end of the day and they forgot to record that they made a sale, then there you go. That could be a reason why you have missing inventory. But that's also one of the things too, is that maybe you sold it, maybe it was broken, maybe you returned it, maybe the owner, because he's the owner of the company, he decided to take it for his own pleasure or whatever it is, right? For his own collection. There's many reasons why people have to take a physical count to ensure that when they are doing accounting in the future, that there is no fraud along the way. There's no one stealing from the company. There's no one, there's also no reason for someone to, take the blame if they forgot to record the sale. So, et cetera, et cetera. There's many reasons why, taking a physical count of inventory is important. And that's where this adjusting inventory comes into play. You have the choice. You can adjust quantity, you can adjust value, or you can do both at the same time. All right. And this is where I'm going to go ahead and let's take a look at how to do this. Now, before we go on and move on to that, I want to show you a really cool feature that QuickBooks can do for you. Okay. So we talked about taking a physical count. So what you can do here is if you go ahead and go to reports, or actually, go to vendors and vendors, right? And we go to inventory activities. Notice this, you can actually do a physical inventory worksheet. So you can print out one and the person can go down there and actually count how many there is and check mark it and bring it back up to there. Okay, so that's what's cool about that. So that is what's necessary for you to go ahead and revalue your company. All right, so inventory activities. But also notice this, you have the adjust quantity and value right here on hand. There's only two ways you can do it. Here in the home page where you have inventory activities, you can go here, that drop down menu, and you can adjust quantity or and valuation. All right, so since I'm here, I'm going to go ahead and click it on my home page. So notice that you have the same familiar looking kind of form/window. However, there's a few differences in that you have to pay attention to. So the first thing is are you going to adjust the inventory for the quantity, or are you going to adjust for value, or are you going to do both at the same time? In this case, I'm going to go ahead and say quantity. All right. And usually this happens at the end of the month. So I just noticed that all my transactions were in February. I messed up because they were supposed to be in April. So I'm going to go ahead and say this one's done at the end of the month. Okay. So there's that. Okay. And first thing that you want to do is you want to associate this in an account. Now, it doesn't have to be this account per se, but this one is going to be called inventory variance. Inventory variance, okay? So what this definition is, and then it's going to pop up this, and we're going to say, don't warn me, and I'm going to click OK. So inventory variance is going to be considered an expense, all right? Notice it's a 50,000. It's an expense because what we're essentially doing is we are taking a loss, all right? So this account can be loss on asset or loss on market for assets. And but this case, it just says inventory variance. Variance meaning difference, right? So again, this can be whatever account as long as it's an expense account, and it allows you to recognize that you're taking a loss due to whatever it is, the market, or due to something that allows you to take a loss on the total cost of the asset. Okay. So again, reference number, it says 2 on there. Again, it's whatever number that you want to do. In this case, I'm going to reference it as inventory -1. Okay, because this is, I'm making adjustment as of the first one, okay? And of course, customer/job, there's no customer/job. Class is going to be overhead because this applies to both locations, okay? Inventory item. So in this case, I'm going to be adjusting my first one, which is going to be my metal picture frames. Okay, and notice as I'm going to go over here to the right, it gives me my current quantity. It says I have 40 items right now available. But from my last person that went down to the basement and they counted every single item, they told me 2 of them are missing. So I only have right now as my new inventory item as 38. So it's either I took one and placed it on display for my customers, or I could have taken one, or the boss could have taken one and gift it, right? Whatever reasons that it's missing, all right? And that's where you're going to have to figure out who did it or what happened there along the way. But that's, again, that's for another time when you're finding those errors. But in this case, I'm missing 2 of them, so my value, I only have 38 on hand. So if I do this, what's going to notice is it calculates how much I'm taking away from my quantity, okay? And if I need to make a note, I can. I'm just going to say physical inventory count, physical inventory count on, okay, that's, I don't know, I think that's good enough. Inventory, physical inventory count, all right? And I'm going to go ahead and click save and close. All right, so let's go also ahead and do another example, because we also going to take a look at devaluing the another one, all right? So that was just changing the quantity, all right? Now this one, for this example, everything is pretty straightforward. It's already filled in for me. So again, I just have to fill out the class's overhead, and the date is the same, right? It's the end of the month. And right here, it gives me my inventory variance account. It automatically knew what account I'm going to be associating this with. So again, I'm going to go ahead and adjust my wooden frames. Okay? And let's say, so here it tells me that it should be valued. I forgot to change the first thing, which is I want value. So if I want value, there you go. And now it's going to give me that right now. Oh, I didn't click value. Click value. All right. So here it's telling me that I have a total of 40 items, and it's in total in value of 200 items, or $200, right? Let's just say wood has become abundance, and it's now saying that it's now worth less than that now. Okay, Wood would never do that, but just for this example here, we're going to say that wood lost its value. So now it's worth 180 in grand total. Okay, that means I lost however many dollars per item in this case. Okay, and now I'm going to go ahead and see now that I have it valued at 180. My difference is $20, of course, and I'm going to go ahead and click save and close. Well, first I'm going to save right here. Wood lost value. Okay, lost value due to market. All right, and then I'm going to go ahead and click save and close. So now let's go ahead and take my another look at my inventory stock status one more time, and now we could go ahead and see what happens when we made that adjustment to my inventory. Oh, okay, so this is stock status, right? Here, I notice that, look at my metal frames. It's now 38. And of course, the cost of it is going to be in the next one. So if I do my inventory report, okay, so reports, inventory, and I do valuation. Let's do detail, not summary. If I go ahead and go to detail, for all items, okay, let's go ahead and take a look. Now, what the item that we're looking for is the 5x7 metal. Notice this, we see all this information, and look, we had 40, it dropped due to the market, and now it's dropped to 180. And it even tells you here that we had an inventory adjustment right here as of the end of the month, and it says right here that now my inventory should reflect the value of 180 instead of 120. And of course, because we're using the cost, average cost, right? We went from we went from $5 to now down to whatever 450. Yeah, so we lost 50 cents per item. Okay, and we recognized it through the inventory variance. So that's what's cool about that, and that's what I mean about manually entering in your quantity as well as your total value of your inventory. Now, of course, when you open up QuickBooks or you create a file and you already have pre-existing inventory, you would use the inventory adjustments to enter in open balances. Okay? Or you can use it to adjust accordingly in case you want to use FIFO, LIFO, and not the average costing, of course, but you would have to do it every single time. So it is a, tedious thing to do, but it is if you prefer to use a different costing method instead of the average costing method. Okay.
It's a little more labor intensive.
Absolutely. Okay. So that is how you adjust the total or the that's how you adjust the total quantity or value of inventory. Any questions?
No, follow it right along with it.
Perfect. Okay, so now that we got to do with it, we have 3 more concepts left. So the first one that we're going to talk about is going to be inventory groups or group items. Okay, so in your book, it kind of gives you a brief little, description of what this entails. So when we are looking at creating group items, okay, this is for the assumption that bundles are a thing, right? So if you're selling a product, right, you would have, you know, discounted items, or you can group a bundle package to make, you know, more money off of it, or for, you know, something to entice the customer with, saying, hey, if you take this offer now, I'll throw in a free 5x7 picture frame. Okay, yes, you can do that. So by doing that, so the essential idea of group items is you're taking two existing products and you're smashing them into one and calling it a bundle package. Okay, so again, pretty straightforward. You go to your item list, okay? And this time we're actually going to go ahead and create a new item, and we're going to create a new item, and this time it's just going to be just a group item. All right. And in this case, it's called a 5x7 retouching. Okay. Now notice this. In my description, I'm going to go ahead and say retouching with a 5 by 7 wooden frame, wood frame. Okay. Now what you notice here is when we looked at our group items, notice that how it's listed. It's listed as if I'm going to add and tack on as many items as possible. Okay. And of course, you want to make sure that you print this information on your receipt, that it is a group item and what it entails. So that's what that is. So in this case, I'm going to say I have retouching. Okay. How many retouchings do you get? I'm going to say you're going to get 3 hours. All right. And of course, I'm going to include my 5x7 wooden frame. Okay. And I'm going to say it comes with it if you buy this bundle package. Now notice this. There is no sales adjustment that I can place in here. There's no package that I can go ahead, or there's no place for me to enter in a sales price for this. So where do I do it? I unfortunately have to do it on a sales receipt. So we'll go ahead and take a look at that in a second. So notice this. I have my repackaging, or I'm sorry, my retouching, and I have my picture frame right here. So 3 and 1. Now, if you remember, my wooden frame is right now $9.99. So I'm going to go ahead and click this, click OK. All right, and there you go. I have my group item right here. Now, if I go ahead and take a look at retouching real quick. So retouching. Let's see how much it costs for a retouching service. It's going to cost me $95 for just one. So I'm going to go ahead and click OK. So let's say I do have a customer that decides to go ahead and purchase a retouching package for me, right? I'm going to go ahead and say Mr. Bob Mason, since he's one of our, popular customers. Okay? And I'm going to say, well, he belongs to San Jose. Okay? And let's say he bought this package on February 20th, let's just say. Okay? And then, of course, my invoice is right there. So here it says quantity. I'm going to say he bought 1. All right? And I'm going to say for the item, he bought the 5x7 retouching. Okay? And what you're going to notice is that it dropped down to enter in what the package includes. So it includes 3 hours of the retouching, and it includes 1 picture frame. Now notice this. My items that I have here are going to be right here, right? They give you that it is $9.95 for the retouching, and it's going to be $9.99 for 1 picture frame, giving you a grand total of $299. Now, of course, the whole purpose of a bundle package isn't to charge that much, right? So what I'm going to do is, let's say I'm going to go ahead and say my quantity for my picture frame is, because it's included, is going to be, it's going to be worth $0 because I'm going to say, you know what? I will still sell one photo picture frame and I'm going to throw it in for free. So by making this adjustment here, I'm going to click, okay, so it says right here that if you sell an inventory item, okay, well, blah, 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 I'm going to click okay. So here, or, most cases, they charge you a penny. That's usually what happens. They charge you a penny. But in this case, oh, wait, here. I don't do it there. I do it over here. They'll charge you a penny for that. But in this case, I'm going to say I'm throwing it in for free since it let me validate it. Okay? I'm going to say it's for free. So that means the person that's going to pay for it, they're not going to pay any tax because I'm throwing it in for free anyway. So, and then 0 times tax is going to give you 0. So in this case, I'm only going to say all you're going to be charged is just for the retouching, and I throw in the picture frame for you for free. So there it is. 95 times 3 gives you 285, and boom, that's what you can do here. You can change the selling price on the sales form, and that's how you do it, right? You have to do it through here. Again, thank you for your business. And then, of course, I'm going to say retouching photo package with free 5x7 frame. Okay. And I'm going to go ahead and click save and close. Okay. So again, when you're doing group items for any bundle packages reasons, you need to adjust the selling price on the sales form. And you're going to have to do it every single time. So that's what sucks about that, is that you're unable to create a group or a bundle package without having to like make a solid what do you call it? A standardized cost or price, whatever you want to call it. So in this case, I said I'll throw this package in. I'll throw in the picture frame for free. All right. Any questions in regards to group items?
No.
Okay. All right. Assembly items. So I've talked very, very briefly about this, and even your book talks even briefly about this as well. Assembly items are only used if you plan on creating a product. So for example, a bakery shop, right? They can say they have milk, flour, sugar, and eggs, right? To make a cake. So what they can do is with inventory assembly. So it's essentially similar to a group item, except you can do portions of a particular item. You don't need to create an item and say one egg is exactly 0.5 cents. You know what I mean? So like you can purchase them as they are, as a group, as an item, right? And then you can do measurements or do portions of an item, and that's how you use inventory assembly. Now, as much as the book doesn't show you an example, I can't do an example either because unfortunately, Pro does not have inventory assembly. Only Premier, Accountant, and Enterprise has the capabilities to do it. Okay? So unfortunately, on my end, I can't show you it, but on your end, the book doesn't even tell you much about it either. It just refers you to group items, which is ridiculous because it's not the same thing as a group item. It's essentially if you're trying to build a product using your inventory items like we just did earlier, right? And but in this case, you can use measurements. Like you could say 1 egg is for 1 cup of flour or 1 pound of flour or whatever, 1 ounce of flour, etc., etc. Okay? So that's what inventory assemblies is for. It's only if you plan on, instead of selling the product as a whole, you're creating the product. Okay? All right. Next and last section we have is going to be inventory reports, which we actually pretty much went over a pretty decent amount of them, right? We got to take a look at the inventory stock status, which allows you to see how many items you have on inventory, right, on hand. All right. Other inventory items or reports that you can do is we saw the valuation, right? We got to see how much each item is valued at. And that's pretty much it as far as that. Okay. And of course, purchases pretty much is straightforward, right? If you end up having a purchase, like you can do purchase reports by vendor. So see which reports that are you pending stuff from. You could do it based on item, okay? And you can look at your open ones, like maybe there you have a current open pending purchase order that you're waiting on, and etc. And that's pretty much as far as that. Okay, so again, we got to take a look at a majority of these different reports, so no need to go over them again. All right, and I believe that is the last of inventory for you. Any questions in regards to inventory?
Don't think so.
Okay.
It tells you how to get into there, into the item quicker.
Oh, yes, of course.
Yeah, it gives them all.
Good, yes. Okay, let's go ahead and do the review questions and call it a day. So, chapter number 8 here. Okay, question number 1. If your vendor ships more than what you've ordered on the purchase orders form, okay, or in this case, it's an overshipment, which of the following actions should not be appropriate? Okay, so here is a should not be appropriate. It's negative.
I hate questions like that.
Me too.
It would be B because the other 3 are the ones we actually talked about.
Yes. Okay. So, in this case, let's just go ahead and go over each one. Okay. You could refuse and all the extra shipment items and then send it back. That is definitely appropriate. You definitely want to do that, and the vendor will to the vendor without recording anything in QuickBooks. That is usually what you should do, and that's the best one. So A is for sure a correct way of what you should do. Okay. B says that you could receive the extra items shipments, okay, using the inventory adjustment transaction. Yes, you technically can. However, what did you do afterwards? So that one is half true that you can do that. It's not illegal unless you don't pay for it. Then yes, it's illegal. But how you properly do it is yes, you actually would adjust your inventory. So B is technically it's a half correct answer. Okay. C, you could receive the extra shipment into inventory and keep it and then pay for it. Yes, that is the proper way to do it. If you keep it, you pay for it. All right, where D says you could receive the extra shipment into inventory and then send it back and then record a bill credit. Okay, first off,
I know that's correct, but it's like, that seems like extra work.
It is, but listen to this. You could receive the extra shipment, okay? And that you receive it, right? And then you send it back and then request a bill credit. You didn't even pay for it.
Right.
It's extra shipment. So that's why in the book it says B is the correct answer, but in this case, I think D is the correct answer because that's definitely not appropriate. Why would you accept the shipment, ship it back, and then force the vendor to give you a bill credit? You didn't even pay for it in the first place. Right? It was their mistake that they sent you the wrong amount. You received it, but then you resend it back. So that's kind of entails right here. It's kind of a weird answer, and it is technically fraud because you're receiving the items, sending it back, and asking the vendor to credit you for it. That's not right. In fact, because they gave you the extra shipment. So therefore, that was a mistake on their end. And therefore, you need to pay for it, not them giving you a credit for it.
Right.
So in my sense, if you read it that way, D is the correct answer or a possible correct answer, but you are correct. It is B. That would not be appropriate, that you should just enter it into your inventory using adjustment. But in context, if you were to accept it and pay for it, then yes, you would adjust it using the adjustment window. Right, you would enter in the total and adjust the quantity, and you would do it through the inventory adjustment window. So that's why I think B is half right. Okay. Number 2, when setting up a group item, okay, where do you enter in the sales price?
I want to say, I don't remember seeing the set price on it, but it can't be it.
So you're saying C?
I'm going to say C.
Yeah, that's correct.
Oh, okay, good.
Yes, because,
I don't remember.
okay, where do you actually set the price?
You do that in the, when you go into the item pricing.
No, we just did this like 5 seconds ago.
No, my mind's going.
It's okay. So you can only adjust the sales price on the actual sales form itself.
On the sales form.
Yes. Again, C is correct. You do not set the price on the actual group item window itself. So you have to only, you have to adjust it either doing an invoice. Because again, you can offer your packages in various ways, right? This package, I'll throw in the item for free. Or in this case, I'll give you a discount off of it, 10% off of the actual thing, right? So that's what that initial thought is. It depends on how you group your items and what packages you're offering to your customer. Okay?
See, my mind was going back farther than what we just did.
No worries, it's okay. It's okay. All right. To activate QuickBooks inventory, what do you do? So this one you have to go way back to the very beginning.
Which is, I think it's D because this is a setup from way back.
Absolutely, that is correct. In order to
That's not the way to
activate,
think about it. That's not the answer, though. Really, to me, I can't think of it like that.
yeah, because like in this case, activating it is like basically turning it on. So how do you turn on or have it appear on the home page? So yes, you would go to the edit preferences and you would click on items and inventory. Make sure you're on company preferences and then click on activate inventory.
I knew I'd find it.
Yeah. That's going to be way far in it's in the very beginning of this chapter. Yeah.
Let's go back. I was able to go back and find it real quick. It's like I'm thinking that's right when you're setting it up. So.
All right, number 4, the inventory asset account. What is it?
D increases the inventory when it's purchased.
Absolutely. It increases your inventory when it is purchased. Good. So let's take a look at the other ones though. So I heard you going through them. So A tracks open purchase orders of inventory items. No, it doesn't keep track of purchase orders. Remember, purchase orders is a non-posting transaction. That doesn't affect it at all. Okay. Decrease the inventory when it's purchased. No, when you're purchasing items, right, you're increasing it. So that's why D is the correct answer. Mm-hmm. And it doesn't increase when it's being sold. It decreases when it's being sold. Good. Lastly, number 5. Okay, in QuickBooks Pro, Premier, and Accountant, right, the inventory can do all of the following except
B, I know that one right away.
B. Use LIFO, FIFO, and other determining inventory costing methods. Yes. Pro, Premier, and Accountant cannot do FIFO, LIFO, or any of those other ones. It can only do average costing. So good. So yes, it can do A, C, and D. All right. Good job. Any other extra questions in regards to anything that we learned today?
No, I don't think so.
All right. So it is 4:30. So if you don't